And, we were quite out of consensus last year because we liked China and we liked India less. And it was really just a reflection of valuations, where a lot of good news was priced into India and a lot of bad news was priced into China. And I think that's still the case. And therefore, we are more cautious, relatively speaking, on the Indian dollar credit side. As I mentioned on the FX, in general, we're not taking big bets versus the dollars. But what we do like is China high yield credit, and we've liked it consistently. It's been outperformer. We think there's still more room to go over there.
China high yield credit, Shamaila, are we talking about Chinese high yield property developer credit or other kinds of paper?
No, that's absolutely right. It's China high yield property and really the defaulted names. That's where we think there is the most value, where essentially a tremendous amount of pessimism was priced in. So we've liked that consistently, but we also like some greater China credit. In general, we think within Asia high yield, that is where the value is. But Asia high yield in itself is a sector that has diversified both by country and a sector perspective versus a few years ago. With the default rates going down, we think the valuations really haven't reflected these positive fundamentals.
So, I haven't looked at the numbers, but I wouldn't be surprised if some China high-yield property developer credits are going for yielding probably low double digits. I don't know. Would the thing to do, and, we've kind of been through this before, right? When China high-yield was the Asian high-yield market, right? The smart thing to do, is it to go as short duration as possible, clip the coupon, and just hope between now and when it matures, nothing bad happens, and you don't have to worry about mark-to-market risk?
Yeah, so the one thing I do want to emphasize is the Asia high yield credit market is not just China high yield anymore. It really has diversified by country and sector. And the second thing is, what we really like is the distressed defaulted space. And from that perspective, what you need to do, Martin, is to make sure you're doing your homework and doing an intense amount of analysis and picking the right names. So it's not really a duration call. It's basically a fundamental analysis, which is really understanding that many of these companies are pricing in not default, not restructuring, but the fact that they would never exist. And that is changing with the property sector starting to bottom out.